How on earth do you predict the future for a massive utility company that serves millions of people? I mean, it's just this huge, complex business. But what if I told you their entire 5-year plan, their whole future, could be decoded by looking at just a few key numbers? Well, today, we're going to break down their official forecast to see exactly where they're headed.
So, really, where do you even start? How do you map out the future for a company of this size and get it right? It seems like an impossible task.
But it turns out, after all the analysis, the entire story, the whole strategy really just boils down to one single powerful number.
Okay, so let's get right to it. It all kicks off with this one big headline figure. This is the number that really sets the stage for their entire growth story.
And there it is, 6.16%. That's the projected compound annual growth rate, or CAGR, for the company's total revenue over the next 5 years.
So what does that percentage actually look like in cold hard cash? Well, it means they're expecting to grow from over 9,700 crore rupees, that's about $1.1 billion US dollars in 2026, to almost 12,300 crore by 2030. That is a huge leap. So the big question is, how did they land on that very specific number? To get that, we've got to look under the hood. Let's dig into the science, the actual data modeling they used to build this forecast.
Okay, so the engine behind this whole prediction is something called an exponential growth model. The easiest way to think about this is like a snowball rolling downhill. It doesn't just get bigger, it gets bigger faster as it rolls, picking up more and more snow. The model basically assumes the company's growth will have that same kind of compounding effect. So why this model? Well, it comes down to 3 things. First off, it's really good at capturing the effects of a growing economy. Second, it tends to give you stable, reliable projections, without crazy swings. And maybe most important of all, they tested it against their own historical data to make sure it was actually accurate. So this isn't just a wild guess, it's a very calculated, data-driven forecast.
But here's where it gets really interesting. That overall 6% growth rate, it kind of hides a much more fascinating story. See, the crucial part isn't just that the company is growing, it's how it's growing. The entire landscape of who their customers are is about to change.
Let's take a snapshot of 2026. The picture looks pretty normal, right? Residential customers, they call them domestic here. They make up the biggest slice of the pie, over 52%. They're the absolute bedrock of the business.
Now watch what happens when we jump ahead to the 2030 projection. See that? The big blue residential slice, it's actually shrunk. And that green commercial slice, it's gotten noticeably bigger. This is the shift we're talking about.
And here it is, side by side. The domestic base, its share of the pie shrinks by about 3.4 percentage points. At the same time, the commercial sector share grows by 3.2. The takeaway here is crystal clear. While residential customers are the foundation, commercial businesses are the real engine of future growth.
So, let's zoom in on that engine. The data shows us that the commercial segment isn't just growing, it is absolutely booming. It's the real star of this entire story. And wow, the revenue growth rates just spell it out. I mean, public lighting is exploding, which is interesting, but look at the commercial segment, growing at nearly 11% every single year. That growth rate absolutely dwarfs the other major segments like industrial. This is where the real money is coming from.
And the report says it all in this one line. Why is this segment so important? Because it has the highest potential for profit growth. And you know what that means, right? These commercial customers almost certainly pay higher rates for their electricity. This isn't just growth for growth's sake. This is profitable growth. Okay, so the data tells a really clear story, but a forecast is just a piece of paper, right? What do you actually do with this information? Let's check out the strategic playbook for turning this forecast into a reality. But hold on a second. Before we dive into the plan, there's always a catch. Every single forecast is built on assumptions, and this one has a pretty big one that we really need to talk about. And here it is. The entire financial forecast uses one single average price, about 7.25 rupees per unit, for every single customer. It doesn't matter if you're a giant factory or a small family home. But in the real world, we know different customers pay very different rates, and that simplification, well, it's a risk. So the playbook has 3 really clear steps. First, validate the revenue. You have to rerun the forecast using the real prices for each type of customer to see the true financial picture. Second, accelerate the winner. Double down on that commercial sector with focused investment and sales efforts.
And third, you gotta secure your base. Those industrial customers are still a huge part of the business. You have to invest in network reliability to keep them happy so they don't leave.
And this is exactly what's at stake. That third point is absolutely critical. Because if they fail to keep that huge industrial base happy, if those customers start leaving for competitors or even generating their own power, that beautiful growth story we just saw, well, it could very quickly start heading in the opposite direction.
So, in the end, it all comes down to this. The data has given them a really clear map. It's pointing directly towards a more profitable future, one that's driven by commercial customers. The big question is, can the company actually follow it? Can they navigate the risks and make the smart investments to turn this powerful forecast into a profitable reality?